Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. We've got some really interesting things to get into in this video. We're going to start things off by just looking at perhaps one way of weighing up interest in the cryptocurrency market. I'm going to be showing you just how low it is. Of course, I'm referring to Google searches. We're going to look at not only crypto under Google searches, Bitcoin, some of the altcoins, and really show you that interest in terms of Google search volume, which I think is a good barometer for general interest in the space, is at a real low point, bear market lows. And this, ladies and gentlemen, is the time that I believe you want to be paying attention to the cryptocurrency market. It was investing in those what seemed as a curse times such as 2018, 2019 that changed my life. It's how I'm sat here in front of you with no financial worries. Well, I wouldn't say none, but relatively a lot less than most people have as a result of being an investor in those kind of doldrum time periods. And that opportunity is here again, ladies and gentlemen. I will lead you to the promised land on this channel. Cryptocurrency and the cryptocurrency market is still, I believe, in absolute infancy. It's not even regulated. And then I want to go over some of the macro, look at Bitcoin. You guys know that we're long and strong and we took a long position despite all the recessionary narratives and the doom and gloom kind of media outlook on the economy. We've taken a stance being long again, despite everything. We're going to be looking at a clip from Alden. We're going to be looking at some federal stats like their payments, like federal spending, which we've seen go up. We're going to be talking about liquidity as well, because you guys know that I think markets generally are a liquidity game. You've got to look at what markets are pegged against. You've got Bitcoin USD, Apple US dollars. It's dollar terms. And when there's an increase of dollars like we saw from March 2020 onwards, typically the asset that's valued in those dollars goes up in terms of dollar valuation. Milton Friedman did a really good analogy on, at one point in the United States, tobacco was a form of currency. You could make payments in it. You could even, I believe, pay your taxes in it. And then everybody started growing it. And of course, inflation kicked in regards to the leaves, and then of course they regulated it and so on and so forth. So we'll also look at some news from Beijing, which is very interesting. China actually potentially looking to now allow crypto trading or blockchain. They've released a Web3 white paper. But let's kick the video off by taking a little look at Google searches. Now this is over a 5-year time horizon. You can see, of course, in the bull markets, and the price is very correlated with this, ladies and gentlemen. What moves the markets? It's human beings. Human beings, of course, you can see represented here almost in regards to interest as a kind of, or here in front of you as Google searches. So you can see bear market lows. We have very, very little interest, and we are there today, ladies and gentlemen. And of course, as time goes up, just like the Bitcoin chart, you will see interest come down but remain at higher levels than it previously was as we onboard more and more users. Of course, as there's more people interested and they get to know about it, it's very logical to expect that. But this is crypto in general, and you can see it's at very, very low point. Let's look at cryptocurrency, see if there's any difference there. And you can see, again, very, very low points, ladies and gentlemen. It's why we took a break actually this month. Excuse me. Because ultimately, it's a very lackluster month, May. If you look at the weather outside, it's pretty darn beautiful out there. And ultimately, people don't want to be sat inside, necessarily watching YouTube videos. If we take a bit of a longer look at this, you can see, of course, your 2017. Then we had a little uptick here. And then, of course, this was when it started to rally previously. We've not seen that huge spike in terms of interest just yet, ladies and gentlemen. I do believe, I don't know why there's a difference between Bitcoin with a capital and Bitcoin without. Very interesting. But we've yet to see another spike in regards to Bitcoin. And I do think FOMO is coming to the markets. You guys know that on a macro sort of level, we think rates are going sideways. And we've looked at what the markets do under the context of sideways rates after an aggressive tightening cycle. Typically, they do well. We think that there's still, okay, more and more people are kind of catching up to the bull side of things that were bearish. And we've said you're very late in the bear trend. If you flipped bearish in December November last year, you're very late in that trend. And it took FTX for a lot of people to actually flip bearish, certainly some of the other big channels out there. But let's look at the likes of Ethereum, just to show you that this is across the board. You can see extremely low point now for Ethereum, typically almost, 2018, 2019 bear market lows. Let's look, for example, at something like Cardano. Very, very low. And doesn't the price chart look awfully bloody similar? Polkadot, which is another favorite altcoin of mine. Polkadot's probably going to be an interesting one. Again, chart action looks similar. It will rise again, ladies and gentlemen. Of course, a Polkadot only really came about in bear market going into the bull market, the last one that we had. Let's Chainlink, for example. Some of the altcoins that I like. Blockchain. You get the picture. And I just want to remind people just how early they are in regards to this space. I believe that this is a technological revolution that we have in front of us, ladies and gentlemen. And investing in cryptocurrencies today is the same as investing in some of the early stocks that came out of the internet. It is the same opportunity, or perhaps you could even say the motoring industry, investing in some of those big motoring companies that are here today, and some of the largest stocks in the world. They came out of the motoring industry, the automobile revolution. You can look at telecom revolution. You can look at PC revolution. You can look at the internet, which I think is the easiest comparison to make with cryptocurrencies because of the kind of effects that they have. You are here today, ladies and gentlemen, with the cryptocurrency market. And if you can ride out the volatility, although we're not hodlers because we're more of an active investor than most, we try and capture the big macro trends, like getting out at the start of 2022 and getting back in at the start of this year when we think the majority of the sell pressure is gone. We've mitigated a lot of risk and now we're back in looking for longs. If you can mitigate a lot of that, and look at the longer term trajectory of this market, of the cryptocurrency space, of some of these layer ones that I think are the equivalent to your early stocks that came out of the .com boom and bust. Of course, there's going to be winners and losers in that realm. You are going to do very well. And this is Bitcoin at $400 billion. You can see it compared with gold at 12 trillion, art at 18 trillion, cars, collectibles at 6 trillion. Isn't that interesting? And then equities at a whopping 115 trillion. Remember we played that clip of who was it? Larry Fink, BlackRock's CEO, talking about how everything blockchain is revolutionizing the world of equities in a bigger way than the likes of ETFs have, because ultimately everything is going to be ran on the blockchain. Now, what blockchain that's going to be on, whether that's going to be a government blockchain or some of the banks' own blockchains, we're yet to see. But I do believe that some of the blockchains that we have today, like Polkadot, like some of the ones that we mentioned, Ethereum, are going to play a role in a lot of this. And then you can see real estate. There's no reason that can't be tokenized and ran on the blockchain. Doesn't mean it's going to have a $330 trillion market cap. It just means there's going to be that sort of value ran through these blockchains. And what's the value of a blockchain that facilitates that kind of value moving around? Blockchain, I've had to send money to all sorts of places across the world. And it's cumbersome and hard. In 2022, for example, we held dollars in the form of USDT. Now, that for most people wouldn't have been accessible because you'd have had to go and get an international bank account, or you'd have had to have a US bank account set up where you could do that, or a kind of FX broker that would allow you to do that. Some people just simply don't have reached that, whereas I could just go onto my crypto applications and buy USDT and gain USDT dominance, and I can send that all over the world. Crypto really does, and Wells Fargo did a brilliant article on it, solve some insane problems that need to be solved. So you can see here, it's always good for me to reiterate this. In these times where it's very doldrummy, it's very low volume, people aren't interested, I'm here pounding the table saying, do not lose hope, ladies and gentlemen. Understand what it is you're investing in and what the proposition that is being put before you is. And for me, I don't think there's any reason to be upset. Let's talk about Bitcoin, crypto. Ultimately, you guys know that we're long and strong. We took a long position literally at the start of the year. If you want to find out more about that, and I may release that video later on that I did on Patreon where we were actually looking in December about 2023 being the year that we invest. And then on the 5th of January, we made a video saying, right, guys, it's time to invest in this market. despite all the narrative that was about, you guys know I love a rounded double bottom. You can trade double bottoms actually with a degree of accuracy. And of course, we've come a long way. Bitcoin's 60-something% up since then. Some of our altcoins are still significantly up. I am underwater on some bags that I bought at these low points, like Alden, for example. I'm a 100% honest trader, guys. I am not here pretending that I get everything right. I don't. But I do get the big calls right more often than not. And that's one reason why I think you guys should all click that subscribe button, leave a like and a comment, if nothing else. And of course, check out the Patreon to find out what I'm buying, where I'm buying. There's opportunities. You want to position yourself now in this period where people aren't very interested in coins that have real use cases, real utility, and that some of them have big partnerships. There was one project that partnered with Deloitte, some of you may know about it, which is the largest accounting firm in the world, to bring a massive use case to the table and facilitate that for them. And I think it's still, is it 20 million market cap? But of course, we will reveal all at a later date. But we're long and strong. And we've said, despite all this recessionary narrative, you know, one reason we got out why did we get out the markets? Let's do this. Forgive me for the longer video, guys. We believe that markets generally are a liquidity game. So if you have an increase in the money supply, and this is why people get frustrated with the stock market, because it's hopelessly overvalued in comparison with earnings, but it's in line with the money supply. And you can see this. This is the US money supply, which is a very good barometer for, let's not have this in orange. I should have brought Bitcoin up first. Let's have it in a nice S&P red. You can see that as the money supply increases, what did the assets do? They go up with it. It's logical. Look at my grandparents, for example, bought a 3,000 pound, obviously I'm in the UK, house that's now probably worth $750,000. You know, I mean, they are getting on a bit. But this is the great game. And this is why ultimately you can kind of, and one thing I want, and I'm just going to stop what I was going to say here and just make this point to each and every one of you. You need value outside of the fiat systems. You need real assets. And that could be Bitcoin and crypto. Even things like gold and silver, I'm somewhat an advocate for. Housing, perhaps. Housing's in a weird place at the moment. And I also think if you're buying in a country like the UK that's becoming very kind of, how do I say this without getting in trouble? Collective. You know, it's interesting how all that's going to evolve, but you need some value outside the system. That's an important message I want to share. But we think investing is a liquidity game. And why we got out in the markets was because of this here. This draining of liquidity. We could put up the Fed's balance sheet, and it's another barometer for liquidity. We talk about this weekly in my Patreon meetings. And you can see as the liquidity drains, the market slows. As it flows, the market comes up. It's almost like the market's ran SVB. And I want to move on to this clip of Alden talking about actually they have been doing quantitative tightening, but quite recently in the form of another way of looking at liquidity, the Treasury's been draining off its balance sheet, as in putting cash back into the markets, their cash balance sheet, sorry. You know, and the thing is with the debt ceiling looking like it's going to be raised, of course it was always going to be raised, what does that mean? It's a matter of time before the monetary supply has to be turned back on again. You know, there's still a lot of liquidity out there. You can see just how in line these are. And ultimately, this brings us on to the point of Alden and what she's talking about in regards to the debt ceiling and how actually if the Fed continues to do quantitative tightening, which, by the way, rates at 5.25% is still very tight monetary conditions. We're calling for a pause and we think markets do well under that. But we still do, we're not oblivious to the tight monetary policies that are in place. But then if you look at things like, for example, you know, this came down. This is, where are we at? We don't need all this. Let's go for a more recent history. You can see markets have relatively gone up with, this is the federal current expenditures, right? And you can see as this came down, so did the markets. But what's it started to do? It started to uptick. And this is a form, look at military spending, look at all these things. This is all forms of liquidity into the markets because it's US denominated, what's the word? It's not demand for the US dollar. It's US dollars that are being pushed into areas of the economy and they find their ways into these little pockets. And also, of course, this is federal government current expenditures interest rate payments, which is nearly $1 trillion. That's so even though interest rates are going up, the Fed have now got to spend more money because they own a load of debt themselves, right? So they still have to push that money into the economy at a record rate, which is kind of quantitative easing. The problem is there's more quantitative tightening in regards to interest rate payments because there's more demand for dollars that need to go back into debt instruments. And this has a kind of tightening credit effect. And credit, remember, is how money comes into existence. But I don't want to continue because I've probably confused quite a few people with what I've said already. Let's look at this comment from Lynn Alden talking about the debt ceiling. Lynn Alden is one of the best macroeconomists out there. I think she's absolutely brilliant. Really hoping to get her on the show at some point. If anybody knows Lynn or knows of a way for me to kind of reach out to her, please do let me know in the comment section. On that note, let's play this clip.
I think there's so much focus on the debt ceiling itself. There's not enough focus on what happens after the debt ceiling. And so for the past 6+ months, the story's been Fed quantitative tightening, raising rates. But something that's not been covered enough is that the Treasury has actually been offsetting a lot of the Fed's tightening. The Treasury has been emptying their cash account into the financial system. And partly that was because they had too much cash in their account to begin with compared to their target. But then starting in January, the debt ceiling actually made them lower their cash account. So when they were in a situation where they were no longer able to issue new debt, one of the ways that they deal with that is they say, okay, we have an existing cash balance that we can begin drawing down. And so their target is to have about $500 billion in that account at all times. In their preferred environment, that's what they would do. But in recent months and weeks, they've drawn that down to under 100 billion, which is way below their target because they still have bills to pay, but they're not able to issue debt. And ironically, while that's happening, while that cash is draining out of this Treasury void and back into the financial system, it's actually offsetting a lot of the QT that's been happening.
So they're nullifying each other. They're canceling each other.
Exactly. They're nullifying each other. But then the question becomes, when they actually solve the debt ceiling, if the Fed wants to keep doing quantitative tightening and the Treasury is no longer emptying its cash account because it'll be practically empty, and then if they want to refill their cash account back up to their target, then it's like a double negative for liquidity. Because they're actually joining the Fed in pulling liquidity out of the market. And I think that's where you could get breakage. If things surprise to the upside in terms of how bad they get, I think it would be because the Treasury does not manage that refilling process well. If they, for example, if they shorten the average duration of the treasuries that they want to issue, then they can probably handle it more smoothly because they can probably get money out of the reverse repo market and into their T-bills. If they try to refill the Treasury account quickly, or they do it too much with longer duration bonds, they're more likely to cause yet another liquidity crisis because they risk pulling that liquidity out of the banks that are already very liquidity constrained.
Brilliant take. Isn't it interesting? And how long, let's take a look at the markets. How long have they been rallying for? This has been going on for 6 months. Of course, we know that markets typically rallied in October, November, talking about the stock market. Crypto didn't quite appreciate in the same manner because, of course, the FTX spiller all the way from you-know-where. But what kind of a period is this? October to July. So it's, of course, over 6 months. But liquidity is the game, guys, when it comes to stocks. And it's very obvious why that's the answer. Of course, there's some perform better than others. But why is liquidity the game? The answer to that is because what are these stocks priced in? It's very logical that if the thing that they're priced in increases, the stock price in regards to that thing is going to do similar. Now, of course, the stock market was closed yesterday. It was a bank holiday. It's opening today. The futures market is looking up. Gold getting hit. Gold needs to be going up for our narrative to be correct. Now, gold, this is new all-time high resistance. So just like Bitcoin 30K resistance, it's expected as exactly that, resistance. Once you clear this, anybody who's been a long-term investor in things knows that you want to pick stocks typically that don't have a lot of headroom above them. Typically don't have a lot of sort of branches above them is kind of the best way for me to use an analogy there, because you're going to hit your head on them and they're going to act as resistance if you've got price action that's above it. Clear skies, typically you go into price discovery and that can be very, very explosive. So I do think gold will do exceptionally well. The dollar, I think, is looking like perhaps it wants to top. Look at the US 10-year yields. It leads the dollar. You guys know that we are big on, we think that this is done. You could have just closed this gap, and we think that ultimately yields are coming down. We've looked at what happens when yield top. They do another rate hike, and then things come a little bit lower. Remember, on Friday, it's non-farm payroll. Do I have anything else for you? Remember, crypto is still in this very early stage, guys. Beijing releases a white paper for Web3 innovation and development. I am going to do an entire video on this. I think it's worth a video, it merits a video on its own. But there's lots to watch. Remember, guys, we are long and strong. We think 30K will get taken eventually. You're almost doing a similar thing to what you did here. And again, once a lot of these resistance levels have been cleared, you know, it's go time. We've got targets for 35K and, of course, 40K plus for Bitcoin. Ultimately, altcoins, in my opinion, will catch up. The narrative's very much on Bitcoin, just like it was on gold with the banking crisis. I think that's it, guys. On that note, I'm going to love and leave you. If you've enjoyed this content, a like is always appreciated. So is a comment. We have a mic that I'm just waiting to get set up. I've just got a few more parts that I need to arrive. So you should be hearing All in Crypto in a lot better sound very soon. Got a few lights and stuff that need to go up in the studio. But other than that, guys, I'm going to love and leave you. Thank you very much for watching. It's always a pleasure. The welcome backs that I got yesterday it put a massive smile on my face, guys. You guys really do mean the world to me, and it's a pleasure to be making these videos for you on a daily basis, and hopefully they're helping you. If they are, then my job is done. On that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you all in the next YouTube video. Have a wonderful Tuesday.